Hello and welcome everyone to another episode of Align, where we help you align with your authentic self, others, and your desired outcomes to live your best life. Today we have one of my favorite humans on planet Earth, Ariana, who we met through a mutual friend, Sean Keegan, who's a wonderful human as well. And I think Ariana, when I first met you, it was very apparent that you had this like gritty, nothing can stop you kind of mindset. And you have a vision, you would pursue it. And obviously, like, of course, she's in VC investing. That's so aligned with who she is. And this is a very dear topic to me and to you because I think oftentimes there's not enough EQ or emotional intelligence in business. And as I've learned more and more about VC in the last couple of months, it takes a lot of EQ. It takes a lot of understanding about human nature, dynamics, because oftentimes there's no like financial models, there's no kind of like financial backing or revenues yet to prove success. And it's your job to pick the winners. So I wanted you to come on board and kind of talk about how does the EQ element help you pick out winners in VC, how you apply to business. So happy to have you on board.
Happy to be on. Thank you for having me, Jess.
Of course. So I think first and foremost is I definitely want people to understand like your story, your journey, what
For sure.
drove you into VC. So what drove you into VC and why did you create your own firm?
Yeah, so total windy type of path to get into VC. I candidly I didn't even know what venture capital was when I was a student, and now I feel every student in university knows what venture capital is, and there's an entrepreneurship minor and on campus Shark Tanks, etc. But I came into, first of all, startups a little bit by accident. So started off with an academic spin out that was spun out of UCLA and funded by the California Energy Commission. So I was on the founding team there and just fell in love with the pace of business. It was just so dynamic and just so aligned with who I am as a person. And I didn't get that level of interaction and action working at these large corporates. Like I worked at a joint venture between Exxon and Shell at Phillips 66, Abbott Labs, all fantastic experiences where I learned a bunch and really loved my coworkers. But I felt like it was lacking in terms of agility and speed, especially the larger the company, the more stagnant it kind of felt to me. So I fell in love with startups just for that reason. And then after that first startup experience, I had the epiphany that I love working with founders so much more than building the tech, and that's what I wanted to be doing for decades. And then fast forward a bit, got the job in VC and really loved that experience. And I see venture capital as kind of this like headhunter role, but also this ultimate customer service role too, where you're over serving founders. So yeah, I love it. And just to kind of compare and contrast that to like a consulting role where you're working one-on-one with the founders, which I did for a time too. There's really a limit to how much time and energy you can really spend with founders doing that. But venture capital is a way where you can work with several founders at scale. So I thought it was the best kind of business model to get into, to work with as many founders as possible and add as much value, because it's really founders who's driving the economy, adding value, creating new products. Really just an incredible set of people. And I'm surprised that there isn't like a National Founders Day or something, right?
And I love that because I think both you and I love connecting people and we like to like find synergies and webs and the people that I've met through you, I'm like, okay, there's a clear reason why she want to put us together. And oftentimes it is definitely a founder of the universe of entrepreneurs. So I think the passion you have for founders is extremely clear and like you just light up about the people in your universe. So that's something I think very special and unique of you that a lot of people don't have.
Oh, thank you.
You got it. Girl. So I think like let's get into nitty gritty, right? So
Let's do it.
obviously you're seeing a ton of founders, you're seeing a lot of entrepreneurs who want you to
Yeah.
fund because you have your own VC fund, and of course they're like dying to have you fund them, and they're dreaming their vision.
Yeah.
What are the non-negotiable qualities that you're looking for, or your founders must have for you to be like, you know what, I would invest in you.
Yeah. That's a great question. I'm looking for folks that really that really have high integrity, high values, also very, very aware, like self-awareness is important, like understanding what's true versus what's not true, like a bit grounded in that sense. And also someone who's empathetic and would set the right tone within the organization for an organization that can scale and set the right culture. Someone who's not afraid of the hard work and the trials and can have the stamina to run a company, and also the emotional intelligence to manage their psychology and the psychology of everyone within their organization. It's a really challenging endeavor. It's not something you wake up one day and say, hey, I'm going to just start this company. It takes a lot of thoughtfulness and time and strategic planning and a lot of effort to get something off the ground and to build a real business that adds real value. So, an individual or founder that has this long-term vision for the company and is really acutely aware of the pain points too. It's not just throwing tech out there and hoping to find a problem, but forming the business and the solution around an existing problem that they deeply understand. So, some of the qualities that I'm looking for.
Got it. And then in terms of the business model or the vision, right? So there's a human element, and ultimately, this is not charity, right? This is a business. So,
Yeah.
what are the non-negotiables in terms of a business model that you're looking
Yeah.
for when you invest?
For sure. So I guess more context on my thesis. So I'm running a $10 million fund called Conscience. So that's the intersection of consumer and science. So you're probably like, what does that even mean? Just to unpack all those words. So early stage is pre-seed seed. So sub $15 million valuations is the strike zone there. Consumer companies. So business models that are either B2C or B2B2C are in thesis. And lastly, science, that can be a technical or data mode, just to put that simply. So in terms of business models, I am looking for these consumer facing business models to invest in. And there's a lot of ways to kind of slice and dice that. I think the model has to align with what the market is and what the product is. So it's not like this rule of thumb where I'm like, I only do these types of business models. It's really so custom to the type of business and product and market that the founder's targeting.
Yeah, and I think like having you've been so helpful for me when I was thinking about what I'm building out, and as you know, and what I was really impressed by was you didn't look at what I was trying to build like this straight on. It wasn't just like a numbers game. It was what is everything else Jess is touching and this business is touching, and how do we tackle that, right? Like it was never a linear point A to point B. You were very mindful of all like the factors and variables around it that will still impact it. So it seems like you're very thoughtful that a business is just not about whether it be making money or serving a vision. It's there's a lot more variables and puzzle pieces that you have to be mindful of and play into for a business to be successful.
Oh, thank you. I appreciate
The
that.
ecosystem, right?
Yeah.
You're like my mini consultant.
Aw, anytime.
Um, and then from so back to the traits or the human qualities perspective,
For
what
sure.
are the red flags about a founder or a founding team that cause you to drop the diligence process and say, you know what, we're just going to pass?
Yeah, right off the bat, any doubts around ethics or integrity of the founder. So I normally check for that by sometimes asking the same question across, two or three calls. Following up with materials to kind of support some of the claims made during the calls. So really going deep in the data room, asking for sets of materials just to validate.
Yep.
I would ask for customer contracts too. So just going really deep and just validating that everything that was said is accurate and true. Um, and I think also I have a no assholes rule. So if someone is just really difficult to work with, and usually that comes out in the diligence process, then there are a lot of opportunities out there, and you are a limited resource, especially me as a solo GP. I would deprioritize that opportunity right off the bat if I sense any rudeness or disrespect.
Hmm. Funny, not funny, but interesting you said that. One of my close relationships from a multifamily office, she was, you would think, like, for example, I grew up in, call it the alternative space, like private equity, real estate, hedge fund world. When an investor or someone doing diligence asked for data, I was like, of course. Like, hello, you know what I mean? Like, it should be a
Right.
seamless process, right? I agree with you. A huge red flag is when people are cagey about things that are so common. Like, we're not asking for like the moon and back, right? We're asking for
Right.
standard annual audited financials. We're asking for standard monthly performance, like things like that, right? Or reference check. That, I agree with you, becomes a huge red flag when A, you're cagey about it, and B, you're giving attitude to the investor or someone doing diligence to be like, oh, we can't provide this, right? It makes
100%.
because it makes
Yeah.
you think, what are you hiding?
Yeah, exactly. Yeah, I have a lot of anecdotes around that we can share offline.
But
Yeah.
it's true. I don't think sometimes people understand as a founder, like there's a line, right? Like, of course, we're not going to ask for your code because that's your code, that's your IP, and we don't want you to give that away.
Right. It's within reason to ask for these things, and it should be expected. Yeah, I'm always surprised by founders that push back on what I see to be a basic set of materials that any investor would ask to conduct, a semi-thorough diligence process. So, um, and usually that's an indication that okay, there's some falsehood here or something's wrong.
Right,
So,
right.
yeah,
And I think like the proper or the professional way to handle it is if it is a request that's new to you that you've never experienced or worked with, ask the question like, why do you need it? Like, what
totally. Yeah,
are we solving for, right? Let's have a dialogue. But I agree with
totally.
you, especially in a world where there's so many managers, so many founders, so many cool ideas. I don't think it's smart to get dinged over not being willing to give information about your portfolio. Like, that's
Yeah. And to your point, I think founders should ask their investors more questions. There shouldn't be any shyness around that. Like, some great questions to ask. What do you invest in? What attracted you to my opportunity? How have you helped founders? What's your typical check size? What's your diligence process like? What are some deal breakers for you, et cetera. You can ask these questions and build a relationship with the founder. It shouldn't always feel like a one-way relationship. And even to your point, if you feel like you're getting asked for information that's confidential or out of bounds from what you've normally had with previous investors, you know don't get defensive, but just ask like, how does this support your diligence process? This is confidential, or I'm only willing to share this under NDA or after we have a second or third meeting. These are very respectful ways to kind of push back politely.
Yeah, I agree. And to the point of this episode, right? Like the EQ of investing, I think goes both ways. It doesn't matter if you're an investor, it doesn't matter if you're a founder, right? Like, if you ultimately we need alignment to
Yeah,
get to a partnership, right? So ask your questions, be thoughtful about it, and like it's never take anything personally. It's never attack, right?
yeah,
If you
yeah,
address it like an attack, you're going to start making things up and treat it like as attack versus be more, like, to your point, be more like inquisitive of like, oh,
yeah.
how this information help you. Chances are there's many times, like, having being in a BD, there's so many times where I'll ask the question, I'll push back on information. It turns out they're looking for B, but they're asking for A. Then,
Right,
okay, well, I'm glad I asked the question. Here's what you're looking for, B. Here's the answer to B, right? So
right.
alignment.
Yeah, exactly. And sometimes, candidly, investors don't know what they're looking for. They're not a domain expert in your field. So if you can be helpful with that, just say, hey, I noticed you asked these types of questions. Here's where I think the gaps are. Let me walk you through that if that's okay. Or I typically like to ask founders, is there something I didn't get to ask you?
Yeah.
And then they can kind of fill in what my mental gaps are during the conversation. So if you can also be proactive and helpful in the process too, like, hey, we didn't touch upon XYZ in our call. I've attached some supplementary materials I would like you to look at. I think having this extra color would really help with your diligence process. Like, that's amazing. Like, I would love to get that kind of email. And very rarely do you see an investor that has really deep domain expertise in your business, right? So yeah.
Otherwise, your investor would be doing it directly and they wouldn't be going to you, right? Like, if
Yeah,
your domain is what you do, I'll just go invest directly. I don't need to invest in a VC fund, right? So
yeah,
trust the experts to the extent that you can. Trust the expert to give you the information you need to make the decision that it's more aligned for you.
right, right. And also, So just like founders have to raise from venture capitalists have to raise from limited partners or LPs, right? So we're also going through that same kind of song and dance too. That's also advice to other emerging managers going through the LP process. Like, don't be afraid to ask questions initially on the calls, specifically around what's the check size, what's the timeline to do your due diligence, what are the types of emerging managers you look for, have you even ever invested in emerging managers previously, and why would you consider this fund as your first investment potentially?
Right.
So yeah, so don't also be afraid to ask those types of questions to your limited partners as well.
Yeah, I agree. And I think like just having my career based in business development, I would say not every dollar is the same. Not every 10 million is the same. And you keep in mind when you have someone as an LP in a private equity or VC structure, you're in for the long time. You're in a long-term 10-year marriage, right? So be very thoughtful about who are the proper partners for you because there's always going to be capital out there
Yeah,
you actually want to have to deal with like on a quarterly basis, right? Like be
right.
thoughtful about that. And I think like sometimes I don't think sometimes I encourage VC private equity or people managers to be ask those questions. So you're making sure that you're also in alignment of who you're onboarding, right? Because capital is
Yes.
capital, money's money. Money is a commodity, right? But your strategy is not. So being more picky, I would say, of who you actually bring in as an investor will save you a lot of headache down the line. Could save you a lot of work that you never want to do, and it's outside like what the realm of what is reasonable and fair.
Right.
It's great that you ask those questions up front.
Right. And I also think founders should be running reference checks on their investors as well. It's a really unique time. There's twice as much private capital available as there was a decade ago. So there's a lot of power in the founders' seat. So, especially like the competitive founders, you have a lot of options. So doing the reference checks and seeing who's really going to be a value add and kind investor and the type of investor you're looking to bring on board is important too. So don't be afraid to initiate for founder recommendations as well.
I like that.
Yeah.
Your early stage VC, oftentimes and not, if not like all the time, you're seeing things pre-profit, right? Is that accurate? Is that an accurate term?
Pre-profit, but rarely pre-revenue.
Yeah. Okay. Got it.
Yeah.
So at least money being kept by the company pre-profit, right? So when you, for example, are working with at the stage where like profits are not really aligned yet, everything's
Right.
still new,
Right.
right? And like I'm only asking this genuinely because like I grew up in a world where numbers are numbers,
Right.
and
Uh-huh.
that's what you invest in. You invest in the cash flow, right? So when you only have a vision, no numbers to back it up yet,
Hmm.
what like how do you decide what's your criteria? And you kind of talked about your themes, but like let's go a little bit deeper. Like what are you looking for to say, you know what, this founder A deserves my check, founder B
Right.
not so much.
Right. So I tend to be first into institutional money in.
Okay.
And at that stage, or at least the types of companies I'm investing into, there's at least some sort of proof of concept or product built, so that there's at least something tangible there.
Yep.
And also, they tend to have some sort of traction at this stage too, whether that's LOIs or paid pilots or revenue from pre-orders, something like that's usually the baseline minimum amount of traction where I would consider a meeting or consider an investment. So they tend to have those two things at least. Um, so there are some early signals, and I guess what you would look for is okay. What does that really mean? So, what's the volume of like pre-orders, for example? How quickly did that happen? What level of effort, marketing wise, did it take to get to that volume? How advanced is the product? How long do they have to go to get something that's commercially ready? So these are the types of questions you're asking and kind of bouncing back and forth, and then using your best judgment too. By usually extending timelines and extending the amount of capital that's needed to get to a point of commercialization. So you're looking at all these things, and then specifically for the types of companies I'm looking into, I'm assessing how big of a technical or data moat does the company really have, and how defensible is that within the business, and do they have patents granted? What's the strength of the team? Do I believe in the team? So I actually spent some time digging into founder psychology too by reading white papers, talking to behavioral scientists, talking to other GPs that assess founder psychology too. Especially as we're remote in COVID, it's hard to really pick up on a lot of these like EQ level indications virtually. So I'm trying to assess that via proxy with the types of questions that I'm asking. And there's only so much time you can really spend in the diligence process. So having an efficient way to better understand, okay, how does the person on the other end really think about this and think about their business and strategy and what are their strengths and weaknesses, et cetera. And you don't really have that clarity until you have several touch points with that founder. So, to that point, I'm writing an initial check, having an immersive experience with them. Some of the founders in the portfolio I speak to on a daily, at least a weekly basis. So getting lots of like touch points with them and really understanding how they operate and how they think, and also getting a lot of active feedback from other investors too. So I typically get a really hands-on role with the founder by writing, a 25 to 30 page investment memo, which helps expedite diligence for these other investors and coming up with a list of, let's say, 60 different investors that I think are relevant and in my network, and then helping them get these meetings. And I'm constantly getting investor feedback as well on the opportunity going through this too. Both at the founder level, the business level, et cetera. How great is the product really? How big is the pain point? So getting a lot of data points from different directions across tech, product, the founder as a person or people.
Got it. Okay.
Yeah.
So it is still, as much as it, there's still like quote vision that you're buying into, and the EQ side, there's obviously huge process behind.
There's a lot of process. Yeah, there's a lot of process. Yeah, and especially you have to be efficient in these meetings. Like I'm not a lead investor, I'm a follow-on investor. I slip checks into often competitive rounds. So there's only so much time you can really spend with the founder to respect their time. So going in, you have to have had your research done. You have to know the types of questions to ask. Try to coordinate via email when you can for the materials and really read through the materials in depth and come prepared with your next set of questions to then dig a layer or two deeper.
Yeah. And Ariana, when we last did a conference together, I moderated on a conference where it was you and a few founders in the VC/angel investing stage. You mentioned you had your concerns about, obviously VC being super rich during these environments, right? And I
Yeah.
think when you're walking me through your process of how fast paced this diligence is, right? Like to me, like, I mean, I grew up on the buy side in private investing. Like we had months,
Yeah.
sometimes years to diligence,
Years.
right? You're like, so I feel like at some point, like, I feel like as humans, you can't really make the best decision when you're kind of forced under pressure. So
Right.
how do you see the dynamic of like, we're seeing a lot more deals, we're getting a lot more money, and there's so much more flow. And now, like,
Right.
you used to have, I'm making this up, you used to have a day, now you have half a day.
Yeah, for sure. Yeah. So the answer to that is meeting the founders as early as possible. Like going in as early as possible and just taking those meetings. As a solo GP too, you kind of have to be very discerning with who you take meetings with. Until I expand the team, but meeting them as early as possible, usually a couple months in advance of when they plan to go out and fundraise, so you have that extra time and cushion. And also, if it's compelling enough, you can, beat even first money in if you're so bold and help them close the rest of the round. So I've actually done that. So that's one strategy. Also, leveraging other people's research too, because often you're not the only investor interacting with them. So asking other investors, hey, could you share materials? Could we hop on a call and walk through your investment rationale here? What do you like? What don't you like? What have been your experiences with this founder? And also, I think the third point here is not to fall into any sort of like FOMO trap.
Yep.
So when I start getting a lot of pressure from founders, let's say I have a single call and, later that evening, they're like, are you in, are you out? I have to know by tomorrow. Like I say, I have to step away. Like I haven't had time to think through this and I need time to reflect and really go through a proper diligence process. And if the timeline is really that fast, count me out.
Yeah, I like that.
Yeah.
I feel like, especially human nature, right? You care more about losing out. So you care more about losing money than actually the potential of gaining, right? So if you're being forced to make a decision, and oftentimes when you're under pressure, it's a bad decision, let it pass. There's going to be more opportunities, right? There's no need. And also, like, from with the sales background, I just don't like high pressure tactics. I
I
think
don't either.
right?
Yeah,
If you're that good, you don't need to use tactics, right? Like you don't need to like. It's kind of also like in a relationship. If you're that great, you really don't need to force someone to commit to you. You know what I mean?
exactly.
Be
Yeah,
like yes, let's do this, right? So I'm with you.
exactly. Yeah. Yeah, exactly. In fact, same with like GPs fundraising from LPs. Like I don't use any pressure tactics. I'm not using any FOMO. The LPs that have come on board and they're fantastic have just expressed interest directly. I didn't have to do any chasing. So same with founders. VCs are their job is to spot opportunities and to pursue them. If they're interested, they'll be pushing the ball forward. They'll be following up with you. They'll be booking the second call. Not to say don't nudge your investor. Like sometimes there's a lot in their pipeline or things get lost in translation. You're constantly on meetings and calls and getting tons of emails, so it's always helpful to have a nudge. But the high pressure tactics just aren't great, and they don't work for
Yeah.
most investors.
Right. Especially, I mean, if you're buying like I don't know, like a pencil or like
Right.
you could return, not a problem. We're talking about investments, right? Like it's just,
Right.
I
And
mean,
it's a long-term relationship, like, it's, treated as such.
right. And also, it takes one bad referral, one bad review
Right.
to just mass market to all their other relationships, right? So, with you on that. The last question is obviously, without a doubt, women in VC are rare, women in tech are rare. So,
Yeah.
how can women better support each other in the VC world? And how do you think men can better support women in the VC world?
That's a great question. I think there are a lot of support groups out there. I recently joined Transact, which is great. There's the Women in VC Slack channel, also awesome. So I think just always having this like positive, supportive energy towards each other, helping with LP intros, helping with deal flow, um, just being just genuinely supportive and kind and there, like ask questions, share resources. It's a really hard thing, to start a fund from scratch, and it's a really hard thing to start a company from scratch. So, female founders and funders should support each other in that journey. And then, same goes to the males in the room too. If you can provide resources, mentorship, introductions, which, access is often the hardest part. If you can take a hands-on role and really provide network access to more female founders and funders, that's game changing. It's often we just don't even have the opportunity to get in front of the decision makers. So if you can make that happen, that's absolutely incredible and incredibly supportive.
Yeah. And I think adding on to like why is it in the male's benefit to help a woman, right? Especially if it was a big boys club, when we if it
Yeah,
started. If you think about it, it's like look at who's across the table, who's trying to give you money. It's a diverse LP set. It's not all men, and they're not all white, right? So you
right.
definitely that in a way also cater. And if you think about like as impact investing, as ESG, as what I consider conscious investing, not greenwashing, people care about the team. People care about who you're investing with, who's on the board, like who has the decision making roles. They care. So it's in your best interest to have a very diverse board. And also like there's always perks, right? Whether it be professionally or even like personally, you never know who you're going to meet if one day helped a female peer in VC. You never know what kind of connections or doors that would open up for you. And I think, again, I'm not trying to be sexist, but I'm going to be a little bit sexist. Women tend to be more generous in their like wanting to help, connect, nurture, and provide. Not provide, but like connect. So chances are, if you do a woman a favor, she's going to give it back in tenfold, right? So it is definitely, in my opinion,
Yeah.
it's male's best interest to help women because you're getting a lot more perks from that one little favor you did.
I totally agree. Like I bend over backwards for my early believers. I'm constantly sending deal flow. I'm constantly making introductions and finding ways to be supportive. Absolutely, I've prioritized them in every aspect. Always down to hop on a call. Always down to find ways to help or be a sounding board. So yeah, I agree with you. It gets paid back tenfold.
Right.
Yeah.
So, Ariana, thank you so much. I think
Thank
it's
you.
so important that the audience gets to see like the the EQ side of VC and investing, and I think it's so important in the world, just in business, that sometimes we get a little bit too caught up in the numbers and we forget, hey, in order to get a really good investment, there's a lot more to it. There's a human element, and I could not bring on a better person than you. Like you're like literally, I let people call me the cheerleader. I feel like you're my cheerleader. Like, you're
Aw,
like, stars. I was like, I guess I can reach for the stars.
do it.
Yeah, no, seriously, like there's things that I've done that I'm not gonna kid you. You were the first person to be like hitting that gas pedal, and I'm like, she's kind of nuts, but she's kind of right. So, for example, this podcast and like everything that I'm building, you were the first person that said to me, like, Jess, just do it.
Aw, aw, I'm so happy to hear that.
So
You're killing it.
I want to thank you for that, and I always wrap up with, I think every person has a unique gift, right? What do you think your unique gift is to humanity?
It's gonna sound so cheesy,
Oh,
but
cheesy.
serving early stage founders, I just love that, it's kind of the underdog story. You're starting a company and you're competing often with these big players, and the risks are high, the rewards are high. I just love it. I live for this daily, and I want to be doing it for decades. And I know that's so cheesy, but it's true.
Love it. By the way, no one's ever said that before, so it's not so cheesy.
Oh, great.
But no, thank you, girl. I will
Thank
see you
you.
soon in the West Coast.
See you in LA. Ciao. Bye.